I seem to have started quite a bit of drama. Unintentionally, of course, but now the conversation is out there, so we're going to address it. RoundHill or YieldMax? Which is the best income ETF provider in the high yield space right now? We have a lot to talk about in this video. I'll give you a little bit of a background as to what is going on and what everyone is talking about for those that don't know, but it's going to be very, very interesting if you are a fan of either of these ETF issuers. But first, before we get into all of the juicy details, don't forget, if you are interested in the high income space in making money through dividends in the stock market, to like the video and to subscribe. Now let's roll that intro. Here's the backstory. I had the pleasure of interviewing Michael Ko, one of the new strategists at YieldMax, and Mike Venuto, who I believe is the CIO or Chief Investment Officer. Now, different jobs. Mike, being the CIO, handles a lot of stuff. Michael Ko, being the strategist, is more in tune with the option side of things, the workings of the funds, to my understanding. And it was a great conversation. It really was a lot of fun. It's really cool looking kind of behind the curtain and seeing how these companies operate. And I know that YieldMax is great at this. Not only are they very good on camera, they're very good in person. They're personable, they're good to talk to, or I should say they're nice to talk to. And they just seem like normal people, which is hard to believe coming from a YouTuber who makes videos sitting in a room in my house versus these guys that are investing billions of dollars for people. And so it was a great conversation. It was. If you want to watch the interview, I'll link it at the end of this one. But there were some key points that we touched on that people were very interested in with the comments. And what it comes down to is the differences between RoundHill and YieldMax. So I will say that YieldMax has been at the forefront of the high yield game. I don't think they invented high yields, but they kind of were able to create these strategies that could make insanely high yields over a duration of time. Not with every single fund, that's for sure. But when we look at funds like MSTY or MSTY, NVDY, they have performed very, very well for high yielding funds. They did what no one really thought was possible. And I will say that because if you look at the MSTY total return chart, even if you count the last couple of months that it's kind of been lackluster, it's returned like over 200%, which everyone called it a scam at the beginning. And if you're new to the high yield space or new to the dividend investing space, people all believed it was a scam because these were the first funds that really optimized those style of returns, even though they didn't outperform the underlying. And that's what a lot of people didn't seem to understand. If you have the underlying of a fund going 1,000, 2,000% into the green, you can not match those returns, but get some phenomenal returns and some income on top of it. And that's a key factor that people seem to misunderstand about YieldMax. But the name is YieldMax for a reason. I'm not sure if it's their direct goal, but they want the highest yield you can get. And that's why they're different. That's one reason why they're different than RoundHill. If you don't know, RoundHill also has growth funds. They have the Mag 7 ETF. They have the Mag X or something like that. That X Mag, something that actually it's a 2x leverage on the Mag 7 ETF. And it's very interesting. You guys know, if you watch my other account, that I like to invest a little bit in growth, but I'm primarily an income-focused investor. And so it was absolutely amazing talking with these guys, but they are different. And so what happened was we finished the interview, I posted it, and another YouTuber made a video talking about one specific set of questions, comparing the YieldMax funds to a new group of ETFs by RoundHill. And I will say that they are speaking directly. I know you guys know this because they specifically mentioned a 1.2x leveraged fund, which is the new RoundHill WeeklyPay series. So let's jump into this next video and I'll explain a little bit more. The video did well. We can see Eugen Vasquez, I believe I pronounced that right. If I didn't, I apologize. Dividend Capitalist. It's a great channel. Go check him out, guys. He gave me full credit for everything. He did everything right. I like when people reuse my content. There's nothing wrong with it. I like more when they give me credit, but if not, it is what it is. So he made a video discussing kind of, I don't want to call them jabs. They're indifferences between the YieldMax team and the RoundHill new strategy of weekly paying ETFs. And we're going to give the full breakdown on both of those, but there is even more background that I want to talk about. And overall, I will give you my opinion on both YieldMax and RoundHill. But let's start. We're going to look at all of the YieldMax ETFs. If you guys are new to the income space, you don't know this website. It's the YieldMax ETFs website. If you've been ever invested with any of their funds, I guarantee you've been to this website or you've watched content where we go over it, which is what I do often. So what we can see is the full list of the YieldMax covered call ETFs. They have their fund of funds. They have the Ulti, Salty, the short option, the Target 12. They have it's got to be 80 funds by this point. They have a ton of funds. And some of these have been around for well over a year. I don't know if it's hit 2 years yet, but Tesla and Coney were two of the first. I invested in them when they launched, when everyone said they were scams. I didn't invest like in my Roth IRA. I bought them for YouTube, which is funny. I've been buying funds for YouTube for that long, but they performed interestingly. There was nothing too crazy about them. All in all, it wasn't my main form of investing. I wasn't pumped about it. They did have some high yields, but the NAV factor weighed in over and over again, depending on the underlying performance. But YieldMax, like I stated earlier, they are yield max. That is an important factor. They want to have the highest yields. And, or at least if they don't have the highest, to be thought of having the highest in the sense that it's the max yield. Now, RoundHill is different. As we go through here, we can see they have their short options, which is just the inverse for, crashes, Tesla, Coin, NVIDIA, QQQ, MSTR. You have the Target 12s. You have Dorsey Wright. You have portfolio ETFs. These are some of my favorites, I will say. The zero DTEs. And then these other funds that are, I think these are international funds. They have tons of funds, but not a single growth fund because growth does not offer yield. That's just the way that it is. So now I want to jump into RoundHill's website and show the difference between these two companies. Now onto RoundHill. And so I want to say I do like RoundHill ETFs. I heard about YieldMax first, but RoundHill had the weekly payers first. And I mean that because their XDTE and QDTE were the first weekly payers besides the two SoFi ones from a long time ago that flopped because they had like 3% yield. If you didn't know that, I think we talked about it in the interview with YieldMax. Yeah, there were two that paid weekly and they had like a 2.5 and a 3% yield. No one bought them. They delisted. But this is where RoundHill and YieldMax are the same. They have very similar strategies with all of these and how they do their options, except for XPay. I don't know too much about XPay, I'll be honest. I know the rest because they're weekly, but that's where they are similar. And then we get into the tricky part, the WeeklyPay ETFs. And this is something that YieldMax does want everyone to know that these are different. There's different strategies, and I'm going to cover that. We'll talk about it in just a moment, but it was touched on quite a few times, not only in the interview, but also I go on Spaces on X with Wolf Financial, Wolf Capital. Either way, they're a huge Twitter or X page, and Spaces is like a live podcast where you talk, there's no video, people listen in, yada, yada. It's great. And it's really, really fun. And YieldMax has been going on there quite often. And Mike on there said the same thing. These are different strategies. And people may get on YieldMax and say, oh, I don't like the way that they're talking about it. And I understand that. I do get what people are meaning by that. But I do also want to say it would be a little bit frustrating to have a product and have it be compared to a separate product that isn't the same, because they are not the same at all. And that just goes for the WeeklyPay ETFs. Again, their other income ones are the same. And now, while I do think that's fair, it's up to you guys. Your opinions on it, are extremely important. But I also do want to say that YieldMax also created their zero DTE funds that are, I don't know if it's the exact same strategy, but they have SDTY, RDTY, and QDTY, which are the same as the zero DTE ones that RoundHill had from the beginning. So there's definitely some benefits to the zero DTE strategies, but I do think it's interesting to go back and forth. But again, I'm in the middle. I genuinely am. I see both sides. I like both of these. I don't feel a loyalty to either one because I like them all. And then of course we have the more ETFs, and we have their leveraged ETFs, MagX, which is just MAGs but leveraged. So let's talk about the WeeklyPay ETFs. These are a 1.2x leveraged income ETF. And I have air quotes with income because it's not, I don't even know what the definition of income is. Maybe I should have included that in the video because they're not paying you premium. It's not coming from an options-based strategy. It's coming from leveraged. And it's very important that you understand the difference between those. And that's what we touched on in the interview that I think was very important. And it's something that Mike Venuto wanted everybody to know. So I've pulled up the prospectus from COIW, the Coin WeeklyPay ETF. We're going to slide down and we're going to look at right here. This is the principal investment strategy. Now, I'm not going to include the YieldMax ones. I'm sure you guys are familiar with them, how they use the options. I've done so many videos on ULTY, now on SLTY, on ymax. They all have a different amount of strategies they can run to get those weekly dividends. And some of them work better than others. As we've seen, some of the funds do really well. Some do really well specifically depending on the underlying and how it's performing. We've seen Coney go on crazy runs when Coinbase is doing well. Same thing with Tesla, same thing with MSTY. But all in all, it depends on the underlying as an important factor, as does the leveraged funds. But even more so, because with the premiums that YieldMax generates, you're getting paid. That's what you're getting paid. I'm going to zoom in for you guys. When it comes to the leveraged funds, I'm going to be real. I'm not 1,000% positive how they pay out when the underlying goes through a negative week, day to day, or week over week, I should say, because they are paying you every single week, and it's that 1.2x. So I'll give my opinion, but I read through the prospectus and I didn't see a definitive answer. So what they're trying to do is they're trying to give you a 1.2x exposure to the underlying. So if Coney went up 10%, COIW would go up 12%. And that is the goal. Now, I don't know what percentage, if they're up 12% versus 10, are they paying out the full 2%? Are they holding some of it for the NAV? How is the underlying price exposure? I know they hold about 20% of the underlying for each of these, meaning you are getting some growth tied into it, but they're saying that it's not a direct investment in COIN. So these are very confusing funds to me, I will say, but they are leveraged. And so one important factor, if the underlying fund, they have it in here somewhere, were to take a crazy dive, it's 84%. If the fund were to drop 84%, this ETF would no longer exist. If COIN, if it dropped 84%, you're out. There's no more of this fund because you have leverage as a factor. But the way that they're doing this is very interesting. Here it is, 83.33% over the course of a calendar week. If coin drops by 83% in a week, we're all in trouble. I'm just going to say that. They also give more info about Coinbase and yada, 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 and they do that for each of these different performers. So I'm going to tell you why I like the leveraged ETFs and why I think YieldMax isn't happy that people are conflating, and that might be the right word, if they're conflating the two, because these are not the typical income that we get from option premiums, but they have been absolutely doing really well. Some have not. And that is kind of the bread and butter to it. These ones have been really performing well. A lot of eyes are on these. The AUMs are growing, and I think people are really interested in them because I think it's a smart way of doing it. Whether or not you believe it's true income, I think it's really interesting to get a little bit of leverage exposure and income into single stocks that I also like. But there's a key factor in that. Single stocks. These are riskier. They just are. They're higher risk because even YMAG is still 7 different companies. YMax is like 15 to 20, something like that. You have higher risk to the underlying falling because there's no security net. There's no safety net. It can tank and it can really hurt. And I've had that happen. So now we're going to look at is some of the returns comparing these funds, both YieldMax and RoundHill, and I'm going to give you guys my opinion on what happened during different times of the market, how they held up, and hopefully help you understand the differences between these funds and how both of them can be utilized to make us money. So what I'm doing is I have plugged into the dividendchannel.com, the drip calculator. We have MSTY and MSTW from the start date of MSTW, and it has underperformed MSTY. We can see MSTY's total return during this time period down 18% versus MSTW being down 31.53%. MSTY on the year is still up like 100%, which is amazing, but it was at a better time at the beginning of the year. And so that's where all of those gains are coming from. It has not been positive for the last, I believe, couple of months. But that's just one important factor. We can see that in the market we've seen for MSTR, MSTY outperforms. Is it always going to outperform? Likely not. We will see different markets push these different strategies to their fullest potential. And so MSTW has fallen more because it is leverage based. You have a 1.2x compared to, I mean, MSTY doesn't even directly invest into MSTR. It's all these synthetics, but still, you have more risk when something drops heavily with the leveraged payers. Now let's look at a non-leveraged, I guess it is still leveraged with RoundHill, but let's take a look at NVDA. So this one tells a different story. We have NVDW, which came out earlier in the year than MSTW, giving it more time to recoup those initial gains. We can see during the down market, it falls faster. During the return, it climbs higher. So it all depends on how you're planning on trading these. Both of them had solid returns. NVDY has made 17.73% versus NVDW's 21.29%. Very good numbers for both. And again, I like both. I don't personally hold a lot of the monthly payers from YieldMax just because I'm more of a weekly dividend guy. And I don't really like their single stock ones as much as I like GPTY, CHPY, YMAX, Ulti, simply because it's just my investment style. But there are some single stock ones that I like from RoundHill because I want leverage and I believe in them in the long run. And there's a very, very important difference. With YieldMax, you have to look at these and go, which stocks have the highest implied volatility to get the most premium, but also have upward trajectory. When it comes to the leverage factor, you just want one that's going to go up consistently. It doesn't matter. You don't want drops at all. You want one that's going to consistently go up. And NVIDIA has basically done that. We did see it fall, of course, in the beginning of the year, but that's one difference. And it's something that you should note is if I'm buying this fund, what do I think the underlying is going to do long-term in comparison to whichever fund issuer I want to purchase. Now, there is another thing that's important that I want to talk about, and that is WPAY coming out for RoundHill, from RoundHill. And it is going to be just a grouping of all of their WeeklyPay funds. And I'm going to be honest, I love this idea. And there's a reason why I love this idea. I love it because I don't really want to specifically choose between, I will still pick some single stock ones because they're higher risk, but I believe long-term I can pick decent stocks. Now, WPAY will give me the ability to have all of them in one grouping, even if the fees are a little bit high, which I'm sure that they will be. It'll be nice because when you have one that tanks like COIW did the last couple of weeks, it's offset by BRKW, which hasn't moved much at all. And that's okay, because it plays into the entire diversification game. So I'm excited for WPAY. I think it'll be similar to YMAX. Will it outperform? I don't know. I'm not going to say yes or no. But all in all, I think it's really, really important for we as investors to understand our end game and to understand that these companies, their goal is to make money. And there's nothing wrong with that. I'm not trying to bash the companies by any means. Their goal is to make money. It's a company. It's what they're supposed to do. But we have to discern between which strategies are working the best. And so if I had to pick one, I genuinely would pick whichever fund is performing the best. That's all I would choose because that's what I care about the most. I want to make more money. I want you guys to make more money. I want us all to retire ASAP. We don't need to be working. We should be able to hold funds, retire. That's the goal. And so again, I don't care if it comes from RoundHill or YieldMax. I don't care if it comes from Defiance, Granite Shares, Rec Shares, Amplify, Neos, Tap Alpha. There's so many good funds out there. Do your research, understand the overall factors for each of these funds, and make sure they align with the strategy that you think is going to be the best in the long run for you personally, or just the best overall in the market. And again, that's why I'm here. That's what I talk about. And I appreciate you guys if you made it to this point in the video. Back to the drama, it's not real drama. Was it clickbait? Maybe a little, I'm sorry. But honestly, I did want to discuss it because I think it was really interesting. These funds are different, understand them both. That's the goal of the channel, is to help discern between these funds, how they work, and what is performing the best. So I appreciate you guys so much. I also want to give out a giant shout out. Thank you to everyone who wished me a happy birthday. That made my day. It was like 300 something comments. Amazing. You guys are absolutely amazing. I can't even believe it. 30,000 subscribers as well. Made my birthday wish come true. So thank you guys so very much. I appreciate you. Anyways, if you like this video, you're going to love these popping up on your screen right now. I do recommend checking out that YieldMax interview. It was a really good time. And RoundHill, if you're watching this, come on the channel. We can do a discussion. I'd love to talk to you, ask you some questions, and just get some information to the people because we definitely are interested. So thank you guys again so much. Don't forget to like and subscribe. You guys are the best. I hope to see you in the next video.